Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, September 6th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor, and I cannot give you personal financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay, title of this slide, first slide. Americans can't afford to live in their own country anymore. Well, this certainly applies to probably the bottom 50 or 60% on that K-shaped recovery split of the economy. If you're someone that's affluent or has money and has assets that are kicking off income, you're probably doing fairly well. Most of the people don't have any assets. They're just wage slaves and they're falling behind because of the inflation. And it's starting to manifest now in various debt delinquencies. So here's a tweet from Porter Stansberry. Credit card delinquencies just surged to 12.3%, the highest level since the global financial crisis. With student loan repayment collections resuming, those delinquencies have also jumped to 10% and are poised to climb further as borrowers struggle with the outdated terms or refuse to pay after nearly 3 years of forbearance. Auto loans are showing similar strain with delinquencies near 5%, a 14-year high. Rising delinquencies signal that consumers are under mounting financial pressure. So here's the graph that was included with this tweet, and you can see, for example, the credit card delinquencies, the student loan delinquencies now shooting straight up since forbearance went away. And you see the auto loans at basically at levels we haven't seen since the 2008 financial crisis. So something's not right here. And again, as I've said before, this is going to manifest, in my view, politically and sociologically. I think it would be incumbent upon the Trump administration and the Republicans in Congress to get on top of this student loan thing. Whichever party gets on this first and deals with it in a reasonable, fair way, so that we don't just excuse people's debt and bad decisions and create moral hazard. But then again, we can't have usurious rates of interest where somebody, is making payments and never is able to pay the debt off. That's ridiculous. And so the whole student loan, grants, all this thing needs to be dealt with. And this is what happens again when government gets involved in things. Okay, it makes it more expensive. And of course, the whole view that everybody had to go to college and we had to subsidize it, it was a ticket to the middle class. That particular canard is no longer true. Okay, and it's going to get worse. And so if you just sit there and don't do anything about this and, boomerize it by saying, well, you took on the debt, it's your problem, it's not my problem. You can say that. And that's what's basically Republicans are saying. But then the Democrats, people that are now emerging into politics, like these Democratic socialists and other Zoomers and millennials that are coming into politics, they will deal with it, and you won't like it. And then you'll have to deal with all the other policies they bring along. And this is a very populist issue that tens of millions of people will focus on. If you're sitting there crying because you don't see any path forward except to be a Russian serf who will be an indentured servant to your student loan debt, you're going to vote for somebody that promises you that they'll deal with it. And it doesn't matter how you boomer rationalize it or you need to deal with it. I'm not suggesting that we just go out and forgive it, but you can't have usurious rates of interest so that somebody is trying to pay this back and can never get ahead. It's ridiculous. So you can either deal with it or you can wait till it's dealt with. And you won't probably like it how it's dealt with. But of course, I put no trust in the Republicans because they're pretty stupid to begin with. So let's talk about the WNA. They had the big meeting in London last week. The report came out on Friday. A couple of things that we already knew, but need to be reiterated in my view. From the report, uranium demand for nuclear reactors is expected to jump by almost 30% in the next 5 years as more governments rely on nuclear power to meet zero carbon target, the World Nuclear Association said in a report on Friday. As a result, new uranium mines and restarted operations will be needed in coming years to meet the burgeoning demand, the WNA's biennial nuclear fuel report added. Demand for uranium in nuclear reactors is forecast to climb by 28% by 2030 and more than double by 2040 to over 150,000 metric tons a year, compared to about 67,000 tons in 2024. It is currently taking 10 to 20 years to reach production after first discovery of a uranium resource, the report said. In the decade after 2030, however, output from existing mines is due to fall by half, so new mines will be needed along with restarts of idle operations. And we've seen how the restarts have went. Terrible. And so you basically have a situation where demand's going to double by 2040. That's 15 years from now. That's inside the window of how 10 to 20 years of how long it takes a discovery to turn into a resource. And by the way, your uranium supply is going to decrease by 50% in the decade after 2030. This is, again, the biggest supply demand disaster I've ever seen. It's going to result in extremely high prices. Okay. No one is dealing with this issue. And prices for uranium need to go substantially higher. I think higher than most people can even conceive. I'm not going to go forecast uranium prices, but uranium prices are probably going to move a lot higher. We have to stimulate, we have to get the price high enough where it just drags billions of dollars into this industry. You know, it's not, I have said this before, the problem that a lot of people don't seem to understand is that we lost an entire generation of investment, new production, development, training, and preparing the next cohort of engineers, miners, and nuclear people because during the 80s and 90s and early aughts, nuclear was out of favor. And then with the Fukushima disaster, that exacerbated it. Now it's returning, and you're basically having to start from scratch. So it's going to take a long time, and it's going to cost a lot of money. And this, in my mind, is the opportunity. So this is a Forbes article that came out. It's nothing new, but what it does is illustrate how more and more uranium is becoming, and nuclear power is more mainstream. Strong demand and disruptions to supply have restored investor interest in uranium, which has outperformed most other commodities over the past month and could keep rising. Canada's Cameco said it was expecting a shortfall in production at its McArthur River mine, while Kazatomprom, the national uranium company of Kazakhstan, has downgraded next year's production estimates. The net result is that the uranium market could be hit by a 20 million pound decline on earlier supply forecasts. Since slipping to $64 a pound in March, uranium has risen back to $76.65 on the spot market, with analysts at the investment bank Morgan Stanley expecting a price of $87 a pound before Christmas. Citi, another investment bank, is forecasting a price of $80 a pound in the next 3 months and a rise to $100 a pound next year, with a positive peak of $125 a pound if a bull market develops, returning uranium to a level not seen since the boom year of 2007. I think uranium is going to go well over $200 a pound at some point. That's it's just without a doubt. There's just not sufficient supply coming online, and the demand is exploding. And it's just that simple. Unless you have, like I said, you have a whole cohort of engineers and miners and nuclear builders and infrastructure that just did not get done because it was out of favor for a whole generation. So here, the title, Uranium, Here Comes the Big Money. I suggest this would eventually happen. And here we have a open group, the Industrial Advanced Nuclear Consortium, which has been formed. And this is very interesting because here's the big money, okay? It's coming. That's not only coming from the private sector, it's also going to be coming from government, which I'll talk about in a second. So basically, the Open Group has officially launched the Industrial Advanced Nuclear Consortium, a collaborative initiative to accelerate the deployment of advanced nuclear heat and power solutions for industrial applications. The consortium founding members, Chevron, ConocoPhillips, ExxonMobil, Freeport-McMoran, Nucor, Rio Tinto, and Shell, represent large industrial users of power and heat. These members will leverage their integration and project delivery expertise to define the requirements for the application of nuclear technology to provide process heat and power for their respective industries. I said this a long time ago. This was inevitable. I mean, you just look at, for example, the oil sands in Canada. Tremendous users of natural gas to create what? Steam for the process of removing the hydrocarbons from the sands, the oil sands. Just about every one of these refinery operations require tremendous amounts of heat and steam for the different processes, for refining processes. Same thing in mining and steel production. And so this is what I expected to eventually happen. A situation where the, you know, the inevitable move of big money into this and large corporations that have the resources to really accelerate this and be serious about this. So we'll see. This is something new. I haven't heard a lot of people talking about it, but this is a precursor of what I think is going to happen. We're also going to see, I think, more moves from government. And so White House, has been taking stakes in various companies, Intel, MP Resources, the rare earth metals miner. Now the speculation is the nuclear energy industry could be next. The Trump administration's move to take stakes in companies across industries may soon have a new target, nuclear power. In a report last week, Compass Point analysts led by Whitney Stanko said the Department of Energy's recent establishment of a new consortium for nuclear fuel paves the way for the Trump administration to take stakes in companies as part of the government's quest to build a domestic supply of enriched uranium, critical fuel used to make nuclear energy. Quote, given the U.S. nuclear fuel industry's interest in roughly $3.4 billion of federal funding from Biden-era appropriations, we believe it may be a target for future similar Trump administration deals. The DOE's Office of Nuclear Energy is expected to work with industry participants in the coming weeks to identify participants in long-term goals. Look, I'm no fan of the government getting involved, but you have no choice. We're falling behind. We need to get this going. The United States needs 40 million pounds a year. We produce 400,000. We're importing enriched uranium. This is a disaster for this country. It has to be rectified. And sitting here just waiting for the price to go up to stimulate private demand, it's not going to work. This is a national security issue, in my view. And so this is going to happen. And combined, I think, with what's happening with that big heat and power users, that process heat and power users moving into this. I saw that you had all the tech executives meeting with Trump. I saw the one cut where Trump turned to Zuckerberg and asked him, how much are you going to invest in this AI the next few years? He said 600 billion by 2028. And so where's the power going to come from? So you see how this is shaping up. You see where the trends are. I'm not suggesting that that will happen. I'm not saying it's not going to be a bust. We've talked about it before, but right now that's where a lot of this investment's going to go. And I think with the government behind it, with its funding, we could see some traction. We really could see bull market we've been waiting for in uranium and nuclear power to really, really get going. So here's Mitsubishi Heavy Industries is going to double gas turbine production. Mitsubishi Heavy Industries aims to double its gas turbine capacity in the next 2 years as demand for the equipment rises globally due to replacement and data center needs. Long lead times up and down the supply chain, forging, castings, labor, so it's not like the turbines can be scaled up overnight. These are massive investments and factories need high utilization throughput to make the economics work. So these decisions are not taken lightly. So you got GE Vernova, which is another turbine manufacturer, Siemens and Mitsubishi. It's an oligopoly. We're all expanding capacity in the 20 to 30% range over the next year or so. They wanted to book longer duration backlog into the 2030s before committing to larger footprint CapEx announcements. BBG reporting Mitsubishi wants to double, would represent a meaningful change in approach and confidence. GE Verona and Siemens have investor updates into year end. We may get similar announcements there if this reporting is accurate. So sure, that makes sense, right? So as this tremendous demand for power is happening, then these people need to ramp up. But they don't want to ramp up unless they have firm orders, because why would you ramp up? Again, this is a tremendous investment and fixed costs. And if there's no demand, if the demand is illusory, is an illusion, then you're making malinvestment. So I knew this was eventually going to happen. We predicted it. We talked about it. Uh, but this also could be the top too, because will this AI thing really play out like people think? We'll have to see. I saw the big build out in gas turbines in the late 1990s going into the early 2000s, and it turned into a big bust. Everybody got into it. That was during deregulation. People built all these plants. Some of them were stranded. So, I'm not sold that this is going to be, what it is, but something to watch. It's something that we predicted. It's something that is happening. So again, beware of, you know, compound annual growth rate assumptions. Here's global data center power usage according to Bloomberg, and you see, it's just com you know, compound annual growth going forward. We'll have to see if that's actually going to happen. Global data center power usage. I think, data is expanding, so data center usage will be going up and becoming more power hungry, but we'll see if it's actually like folks are thinking. So here's a pipeline, new U.S. gas power plants, 6 times more than 2024, actually. Pipeline of new U.S. gas power plants is now 6 times larger than it was in 2024. We say until blue in the face. EPA's 2024 rule effectively banning baseload gas in the middle of the AI build-out could be on the Mount Rushmore of dumb energy policy. So I don't know the full extent of that, what that ruling was. Evidently, the ruling was that you can't build baseload gas uh, plants. That's I need to investigate that. But anyways, the pipeline is growing, so the demand is there. And so this is just showing global natural gas power capacity in top 15 power producing countries. This is the pre-construction forecast here. At Cecily here, firstly, the U.S. total handily exceeds the planned capacity pipeline at the same development phase in all other countries, including second place China and in pre-construction third place Vietnam. That relatively larger development pipeline means the U.S. gas-fired capacity will grow more quickly than in other countries over the near to medium term. So again, we've been talking about it. It's happening. What's that going to do to gas demand? What's going to happen as LNG export capacity increases massively? Are these two things going to run into each other and cause an increase in gas prices? We'll have to see. Again, we go back to another fundamental discussion and disagreement between different factions in energy analysis, that natural gas is a cornucopia that will not run out for decades and decades or centuries, and the fact that these are declining assets and they may have reached their peak. We will see. So I want to say this, things are not always what they seem. From Josh Young, headline, OPEC Plus will likely increase oil production. Buried lead, actual increases from the group, however, have fallen short of these pledges as some members struggled to raise output due to capacity constraints. So from the article, actual increases from the group have fallen short. This is what we've been talking about. Just because they say they're going to have this capacity and they're going to bring it back online doesn't mean they're actually going to bring it back online. That's what we've been saying. Okay. Don't believe why would you believe OPEC, anything that they say? Okay. And then you couple this with shale slowing down. What are you seeing in the actual oil industry? What are you seeing on energy and oil stocks? They're starting to rally. Something I still think that we're looking at higher oil prices. I think that a lot of these assumptions that are being made are incorrect. And I think that that's going to manifest in higher prices as going forward. There's a tweet from Octavio Costa. What happened to drill, baby, drill? I said. The decline in oil and gas operating rigs over the past 4 months has been the steepest since the COVID lockdowns. We are likely approaching an inflection point for energy. Rig counts are falling. Inflation is picking up again. Bearish positioning is at its highest in 15 years. Sentiment is deeply negative. Energy stocks starting to break out. Turns out drill, baby, drill isn't as easy as it sounds. Again, I'm bullish on oil stocks over the next several years. I think their oil is going a lot higher than people think. And I think once that turns, it's going to be, this is why I've been positioning in a lot of energy names. I still think that I just don't agree with the consensus on this. So this is why I put here, a lot of people get energy wrong. They think they know, but they don't. And I remember this from Tommy Boy. It struck me, there's a lot of things that go on in politics or in the U.S. Um, this was in that movie Time Boy, Ray Zelinsky, the auto parts king. There was a scene in there when they were in the elevator, and this guy Ray Zelinsky was going to take over uh, Callahan Auto Parts and put cheap stuff in there and slap the Callahan name on it, typical corporate mentality. And then Tommy Callahan, being the naive schlep that he is, schlep rock. Well, what you're saying is a lot different than what you say on your commercials on TV. And he turns to he said, I thought you said that you were, for the American worker, and all this. And then Ray Zelinsky turns to him and says, what the American public doesn't know is what makes them the American public. This isn't taking a cheap shot and saying, you got to know what's going on, because the news that you're getting, the consensus views, they're all biased. They all have political biases to them. They all have they just you really got to look hard at things, because what the average person believes just is not true. I mean, they just don't know what's going on. And if you're investing money, you can't be that person. I just think I could make a t-shirt out of this, because this was a tremendous scene. It was so true. It was funny. It was so funny the way Dan Aykroyd played the character, but it's so true, actually. So it looks like maybe the Bitcoin bros are looking at precious metals. This is what happens when things go up, shiny object go up, attract attention. It's not hard. We talked about this before. It's from the Financial Times, the headline. Stablecoin group Tether holds talks to invest in gold miners. Boss of crypto company that posted first half profits of 5.7 billion has called the precious metal natural Bitcoin. So um, this would not be bad for us if we're in the middle of a precious metals bull market. The miners are responding finally, and I think we have a long way to go. We got a lot of attention on this now, so that could be, things could be overbought. We could be at a intermediate top. I would not be surprised if we had a pullback, but so far, you know, things just keep going in the right direction. So I think we're still in the midst of a longer term bull market. There will be pullbacks. What do you do in a bull market? When you have a pullback, you buy on pullbacks. And so I put this on here. This was from Ronnie Steufel's group, market capitalization in US dollars billion, 7/31/2025 as of when I put up here, when silver runs, it really runs hard. And why? Because the market cap is so small for silver mining. Okay, you show here like the S&P 500, 53 trillion, gold 22 or billion, I'm sorry. Yeah, it'd be 53 trillion, gold 22 trillion, Nvidia 4 trillion, Bitcoin 2.3 trillion, silver bullion 2 trillion, gold mining stocks 702 billion, precious metals and minerals mining sub-industry 79 billion, and the silver mining, just the silver mining stocks 18 billion. So it doesn't take a lot of capital to come into the silver stocks. This is why when silver takes off, um, it runs very hard, okay, because the market is so small that when it becomes a shiny object, it goes hard, it goes fast, and it usually exceeds the returns on gold. That will also be an indication of a end of the precious metals bull market, if history proves right. So something to keep your eye on. This capital, like when Nvidia finally blows up this AI thing, in the S&P, we have a bear market. A lot of this capital is going to go into these precious metals, and their market caps are so small that this is why I say it's a tremendous opportunity, notwithstanding the fact that we may be at an intermediate top just because things have run so hard recently. So keep that in mind. So China Gold, their stock levels, you see what's happening. Something is happening. China's prepping for something. I just think it's its emergence on the world stage. You saw that what happened last week, the Shanghai Cooperation Organization, the parade, the military parade, the emergence of China now as a geopolitical force. You see India, China, and Russia meeting together. This is going to continue the trend, which I've talked about, which is the emergence of the global South and East, which can no longer be ignored. This is why I'm moving a lot more towards the global South and East with my investments in the AIA portfolio, in the newsletter. That West is in terminal decline. I can point it out over and over and over till I'm blue in the face. Some people are so nationalistic, which is fine. That's fine. But when we're investing money here and you have a declining Atlanticist hegemon and a rising global South and East, it seems obvious to me, but a lot of folks still haven't caught up on it. And we are moving more and more of our assets, my assets, into that. And I suggest you take a look at that because the future is the global South and East, not the West that's in terminal decline, which for many reasons, which I don't have time to go into, we've talked about before. You can go to the reality check, which is available on Rumble and Bitchute because I talk about it over there because it's just not going to be appropriate for YouTube. So here's more winning EU style. Once popular in Russia, French manufacturer Michelin, that's a tire manufacturer, voluntarily left the lucrative Russian market in 2022 because sanctions. Putin bad man, must have sanctions. Today, they are closing their factory in the French city of Vannes, which has been operating since 1962, and in November, another one in Cholet. More winning EU style. That's what I'm trying to tell you. It's cooked. The EU's cooked. The US is cooked. You don't get it, you know? Notwithstanding the fact that you can make money, we've made a lot of money on European banks. I'm getting close to making a decision with rates going up because of all the debt. At some point, we're going to have a financial crisis in the EU. I'm looking now to move. Banking's been very lucrative for us, and the recovery in European banks and the dividends and buybacks. But it may be time to now take those profits and move into really cheap banks in, places that you wouldn't even think to put your money, but have tremendous growth and tremendous returns. Here's even more winning. During the meetings last week, the Power of Siberia, new Power of Siberia 2 pipeline from the Yamal Peninsula. Let me point out that the Yamal Peninsula, that gas was slated to go to Europe, uh, 5, 10 years ago, once that was developed. And because of the sanctions, because of what the, United States and the EU have decided to do, that gas will now go to China. Will this pipeline be built tomorrow or the next year? No, it'll take time. But this is again more of the shifting. Mr. Putin gave a speech in Vladivostok like a year or two ago where he said it wouldn't surprise him. He'll be dead by then, so will I. But by 2050, it's very possible that Vladivostok will be the capital of the Russian Federation. They have made the decision because the West doesn't want to deal with Russia for all of the historical reasons and a lot of the chauvinism of the West, trying to hold on to this Atlanticist empire. They're losing the war in Ukraine. Their countries are being overtaken by Islamicists and running wild criminals. Their industry is sclerotic. The whole thing is failing. The EU project must continue. And so, with all of this stuff going on in the EU, now they want to send troops into Ukraine. See, this is what they have. The project must continue no matter what. The EU project must continue. Doesn't work, more EU. This migrant situation blew up in our face, more EU. People don't like it, more EU. Okay. So must create, you've had elections coming up in one of the states in Germany, and I think 7 or 8 of the politicians of the AfD have died. So of course, conspiracy theorists have come out and said, what's going on there? So we have to ban the AfD because, the people don't want the EU project anymore. They don't want the migrants. They don't want the economic sclerosis. AF Day, uh, uh, whatever it's called in France, Front National, all these right-wing parties are coming to ascendance. We just have, I do it on the reality check. I could sit there for every day and put out a 2-hour video of all the rapes, the murders, the savagery going on, and people have had enough. Okay, and they're not allowed to express this. There's been crackdowns in the UK. There's been people going to jail for putting tweets up. There's all kinds of this stuff. That's what's going to happen because we must preserve this project above all things. That's what's only important, not the condition of our people, but the project. And so, Russia, China, India, what are you going to do? Slap sanctions on them, as Mr. Trump says. Okay, this isn't going to work anymore. Don't you understand? It's not going to work. And so if you want to isolate yourself into this Atlanticist, the US and Europe, where Europe's a vassal state that's basically gets wiped off on by the United States and taken advantage of economically, fine, more EU. That's the answer. Not to stand up and say, we made a mistake, this isn't working, we need to look at other things. And they're just not going to do that. They're just going to continue down this road until you physically go in there, grab these people by the nape of the neck and the seat of their pants, and throw their ass out. Okay? That's what you're going to have to do in all these countries. And what I find amusing is, which you can find on the reality check, as Islam starts taking over these countries, France and UK will be I believe, are there any Islamic countries that have nuclear weapons now? Oh, Pakistan. And so you will have two nuclear armed countries that are Islamic in the next generation in the Europe. The UK and France will have nuclear weapons and they'll be Islamic countries. And so what's the United States going to do? How does that survive NATO? What are you going to do? I mean, this is going to be very ugly over the next 20, 25 years in this world. Really bad things are going to happen, and it was all preventable. But anyways, I wanted to show this is even more winning, all that energy, because energy is life, energy is industry. Economies are energy transformed. And without cheap, reliable, plentiful amounts of energy, your economy goes down. You see that in Germany. You see that in Europe. And yet it's not registering with people because more EU. The project must continue. Here's the status of BRIC countries in the energy world. Who needs the West? So you have here crude oil. Uh, Russia's the number two net exporter of crude oil. Who's the biggest importers? China, number one. India, number three. Natural gas. Russia's the number two exporter. Who's the biggest importer? China. Coal. Russia's the number three exporter. Who's the biggest importers? China and India. Who needs the West? They don't need them. Don't you see what's happening? That's where the opportunity is, the global South and East, not the declining, sclerotic, corrupt, fat, overweight, no ideas, declining West. But hey, people will wrap themselves in these flags and say, hey, it's all good, you know? So I wanted to put this in as a fall as the end. I'm having internet problems, so I'm trying to get through this. Doing a lot of work in my neighborhood, and we've had spotty internet, so I've had to do this video 3 times. But anyways, that's why I went through these slides pretty quick this week. I wanted to put this up here. Nothing stops this trend. This is the longest trend that's in place investment-wise that you need to be aware of. Own assets or be left behind. This is the purchasing power of the US dollar. It is going to continue to decline and continue to decline. If you don't own hard assets, if you don't own things that are generating income that are increasing their income levels, uh, you are going to be left out. It's just that simple. Okay. Um, the whole dynamic of the whole way things are set up is changing under your feet, and most people don't see it. So they complain about jobs or wages. Yes, you should have a job. You should look for other ways to generate income, and you should be investing in long-term assets that are going to produce income for you that is growing over time to offset this, which is the longest trend in investing in the last 25 years, and which will continue and appears to be accelerating to the downside, loss of your purchasing power, because this government doesn't have any money. The governments in the West, G7, G20, they're broke. They are in debt. They have made promises that they cannot keep. Okay. And so what are they going to do? They are not going to cut back. They are not going to balance the budgets. They're not going to live within their means. They're going to do what historically the political class and establishment has always done. They are going to create more currency units and try to paper it over. That's what they're going to do. And you're going to, a lot of these problems that you see people talking about on the internet, they can't survive, they can't live, how do I make ends meet, is all a result of the government corruption, malfeasance, and fake monetary system. Okay? It's just that simple. And this is why people are moving to Bitcoin. This is why people are moving to gold and silver. This is what's happening. This is why the Chinese are not, buying all the gold. At some point, gold's going to be remonetized. It is being remonetized. And if you don't get this, then you're not going to make it. Your life is going to be very, very hard. So that's what I have to say about this. This is going to be a very long investment trend that has flipped. The script has flipped over the last 5, 10 years, and most people don't get it. They don't get it when it first changes, when a paradigm changes. Okay. It was the same thing when hard assets were popular in the late 70s up until, gold peaked in like 80, 81, whenever it was. And people still held on to that inflationary mindset into the 80s, even though rates were coming down and inflation had been crushed, because it takes a long time for the mindset of people to change. So you have to be very nimble and be thinking about these things. So you can disagree with me. I'm just telling you how I view things. Everybody has their opinion. I think that I'm on the right track here, and I think so far it's been working and will continue to work. And I just really, there's really a lot of opportunity out there by using the tax system, um, uh, using self-directed IRAs, using dividend stocks, using selling call options to generate income. I mean, I'm generating 5 figures a month just in option premium and covered calls inside of tax sheltered, tax deferred things like self-directed IRAs. It's all possible to do. Now, did I start out like that? No, I started out with absolutely nothing. Okay. I went to boot camp in 1985 with no money to my name and built myself up over time. And if I would have known the things I know now, I would be a lot even further ahead. But it's possible to do this. You must do this. You must have a plan because things are going to change radically over the next decades. And it's not going to be like it was before. All right, that's it for this week. Thank you for watching, and we'll talk to you next week.